Hello family, welcome back. It's Sir Ashley. In this video, I have tons of market updates to share with you today, and we're going to touch on the following things. We're going to talk about mortgage applications, plus mortgage interest rates for fixed mortgages, as well as adjustable rate mortgages. Yes, adjustable rate mortgages are back, and we will touch on what that means for the average home buyer and seller. Plus, we are going to talk about housing sales and housing prices. Stick around. Let's go ahead and dive right into the video. Mortgage application numbers have increased, and according to the Mortgage Bankers Association, or the MBA, the total number of mortgage applications, which include refinance applications as well as new purchases, has increased 1.2% from 1 week earlier. But if you look deeper, you will see that refis are up substantially, but new home mortgages are actually down by 2% from the week prior, and only up 2% from this time last year. And you have to remember, at this time last year, absolutely no one was buying or selling because we were all on lockdown. So the fact that we are only up 2% in purchase mortgage applications might be an indicator of things to come. Mortgage rates did increase last week, with all loan types hitting their highest level in 2 weeks, and the 30-year fixed rose to 3.15%. It is absolutely insane when we say the mortgage interest rate has increased and people are disappointed that it's 3.15%. It's just a sign of the times. But despite the increase in the 30-year fixed rate, refinance applications actually increased by 2% last week. And we already talked about how new home purchase mortgages for fixed rate 30-year mortgages have decreased by 2% according to the MBA. But the ARM, the adjustable rate mortgage, share of activities have increased to 4% of total applications. Now we're going to come back to adjustable rate mortgages in a second. But first we have to talk about housing sales. Housing sales have decreased for the third month in a row now. Now this decrease in sales is occurring while there are new listings and new supply are starting to rise. Sales of existing home, meaning single family homes, houses, and condos, dropped 2.7% in April from March of 2021. And that's after a 3.7% drop in March and following a 6.3% drop in February. Now the Case-Shiller U.S. National Home Price Index released on March 25th, just yesterday, that home prices in March of 2021 increased over 13% from a year ago. And that's the largest gain since 2015. In fact, home prices have risen for 10 consecutive months. Now that 10-month of consecutive home price gain is the longest streak since December 2005. And while March saw an over 13% annual increase, as someone who's in the field every single day and doing transactions, I can confidently say that I believe the annual increases in April and May of this year will be more than the March record of 13.2%. Now remember I told you that purchase mortgages have decreased this week and is only up 2% from this time last year? Well, part of the reason for the decrease in home purchase mortgages is because builders have slowed down or stopped building. And according to the U.S. Census, single-family housing starts, meaning the starts of new construction, has dropped more than 13% in April compared to March of this year. I personally have talked with several construction managers and GCs for new home communities in my city, in and around my city of Charlotte, North Carolina, and they blame the construction difficulty on trying to get lumber and trying to get other products like appliances, windows, and even vinyl siding right now. Many people don't look at the rising house prices on the macro level. For example, lumber prices have skyrocketed 52% since just November of 2020. And one factor impacting lumber prices here in the US is the fact that the US dollar has weakened compared to the Canadian dollar. Therefore, that affects the US buying lumber from Canada, because compared to the Canadian dollar, the US dollar has depreciated 5% year to date and 13% over the past 12 months. And that exchange rate is impacting affordability on houses here in America. Quick story. One community in the greater Charlotte area planned on putting vinyl sidings on about 180 homes they have remaining for their community, But due to the delay and shortage in vinyl siding, the builder is switching to using hardy plank. Now, hardy plank is an excellent product and a better material than vinyl siding, but that minor change is going to end up costing the end buyer significantly more because hardy plank costs more to buy and it costs more to have it installed. So the purchase price of that new home will be higher than it would have been if there hadn't been a delay or shortage in vinyl siding. Another challenge new home builders are facing is labor issues. These builders are having a hard time finding and keeping qualified subcontractors. One builder recently told me that after the Great Recession between 2006 and 2015, it really had a trickle-down effect because he says we lost a whole generation of tradesmen. So he's having to go back and micromanage every single step of the building process, sometimes 2 or 3 times, to make sure things are done correctly. So, home prices are way up, and builders are slowing down or not building at all. Housing inventory shortages, coupled with low interest rates and a substantial increase in construction and land costs, have caused home prices to skyrocket. Up until recently, the higher price on homes, especially new homes, didn't really impact sales. But today, when you look at the rate at which buyers are applying for purchase mortgage applications, it reinforces some concerns that I am personally hearing from builder reps when I have conversations with them. Builders who now have homes in the low $400,000 range or higher are seeing a slowdown in activity amongst buyers. Now I understand every market is different, but here where I am in Charlotte, the median home price is around $300,000 to $330,000. And some reps who I've talked to for these new communities are saying that they are pricing out a lot of the local buyers, and subsequently they believe that the majority of the buyers moving forward will be moving from out of state. So the rise in home prices is acting as a deterrent for people to even apply for a mortgage. But this is where ARMs come into play. ARMs are adjustable rate mortgages. United Wholesale Mortgage, the largest wholesale mortgage lender, has brought back a product for adjustable rate mortgages. Now, this is not an exhaustive list by any means, but some of the offerings for adjustable rate mortgages are as follows. They're offering fixed rate terms for 5, 7, and 10 years with a loan to value as high as 90%. But the main product they're pushing is the 7-year fixed ARM. Now, in this video, I'm not going to lecture or explain how I feel about ARMs and if they're good or bad. In fact, in the comments, please let me know what you think regarding adjustable rate mortgages. But in this case, ARMs are gaining momentum in this marketplace, today's buying market, because generally with an adjustable rate mortgage, the initial fixed rate is generally lower than the interest rate would be if you got a 30-year fixed mortgage. And that initial lower interest rate will allow you to qualify for a higher purchase price. And with the increase in home prices, some buyers may feel the urge to seriously consider going with an adjustable rate mortgage. But before you make any type of decision on any type of mortgage, do a deep dive into your life, your personal life, and your finances, and educate yourself regarding the possible repercussions of whatever choice you make. Now, if you like housing updates and videos on money and improving your credit, be sure to hit that like button and also subscribe to the channel and tap on that notification bell so you can be alerted when we drop new videos. I'm Sir Ashley. Talk soon.